Join me as I dive into the world of SOXL stock and see if I can predict if it's about to explode. SOXL stock, for those who might not know, is a popular ETF that tracks the performance of semiconductor stocks. It's a key player in the tech industry, and its movements can give us insights into the sector's overall health. With the current market landscape being more unpredictable than ever, it's essential to keep an eye on SOXL and understand what drives its performance. SOXL has faced some tough times recently, with market volatility taking a toll on its price. We've seen some significant swings, and investor sentiment has been all over the place. The ETF's been struggling to maintain momentum, and it's left many investors wondering if it's a good time to buy or sell. One of the main challenges SOXL faces is its dependency on the semiconductor industry, which is highly susceptible to market fluctuations. The sector's been under pressure due to global economic concerns, and SOXL's been no exception. Its recent performance has been a mixed bag, with some investors holding on for dear life while others have been cutting their losses. It's a high-risk, high-reward situation, and it's crucial to understand the factors at play. As we analyze SOXL's potential, we need to consider the bigger picture and how it's connected to the tech industry as a whole. The industry's fundamentals are still strong, with semiconductor stocks showing resilience in the face of adversity. However, market conditions are always changing, and SOXL's got to adapt to stay ahead. Its expense ratio and trading volume are also essential factors to consider when evaluating its potential. Several factors could influence SOXL's growth, and we need to examine them closely. Industry trends, for instance, play a significant role in determining the ETF's performance. The ongoing shift towards renewable energy and electric vehicles is driving demand for semiconductors, which could be a positive catalyst for SOXL. Company fundamentals are also crucial, as the ETF's holdings are comprised of some of the biggest players in the semiconductor space. Their financial health, innovation, and competitive advantage will directly impact SOXL's performance. Market conditions, on the other hand, are always a wild card. Global economic trends, trade policies, and interest rates can all affect the ETF's price. We've seen how quickly market sentiment can shift, and SOXL's not immune to these changes. Some experts believe that SOXL's poised for a breakout, citing positive trends in the semiconductor industry. They point to the increasing demand for chips and the ETF's diversified portfolio as reasons to be optimistic. Data also suggests that SOXL's been oversold recently, which could lead to a rebound. Other analysts, however, are more cautious, citing concerns about market volatility and the ETF's high expense ratio. In my analysis, SOXL's potential to explode is tied to its ability to adapt to changing market conditions. If the semiconductor industry continues to grow, and the ETF's holdings perform well, we could see a significant price increase. However, investors need to be aware of the risks and not get caught up in the hype. It's essential to have a solid understanding of the ETF's fundamentals and market trends before making any investment decisions. To recap, SOXL stock's a high-risk, high-reward play that's closely tied to the semiconductor industry. Its recent performance has been challenging, but there are reasons to be optimistic about its potential. As always, do your own research and consult with financial experts before making any investment decisions. What do you think about SOXL stock? Share your thoughts in the comments below. If you're interested in learning more about stock market trends, check out my other video on the top tech stocks to watch in the coming months.